NBC TV 18, celebrating 15 years of leadership.
Selling pressure grips Dalal Street for the second straight day week. Global cues shave off over 300 points from the Sensex. The Nifty tumbles below 8,400, hitting its lowest level in a month. Midcaps hammered out of shape.
It's a sea of red across Asia and Europe. Chinese stocks tanked 5% over liquidity fears. Wall Street tumbles for second straight day. European markets also sell off with shares increase, crashing over 10%. Crude oil prices hit 5-year lows.
The Telecom Commission finalises the reserve price for the 2G and 3G spectrum for the upcoming auctions. Prices airwave 17% higher than the TRAI's proposal. The government hopes to mop up over 9,300 crore rupees. The Telecom Ministry will take a final call.
Relief for India's top two telcos. Tribunal sets aside 650 crore rupee penalty imposed on Airtel and 100 crores imposed on Vodafone by the Telecom Department. The penalty was imposed for offering subscribers local dialing services between 2002 and 2005.
कल अगर रेलवे में एक्सीडेंट हो गया तो रेलवे बंद कर दो, टैक्सी में हुआ तो टैक्सी बंद कर दो, बस में हुआ तो बस बंद कर दो, तो ये तो बात ठीक नहीं होगी.
The government is divided over the ban on web-based cab services like Uber. Transport Minister Nitin Gadkari says a blanket ban is not the solution, but the Home Minister asked states to stop cab services till they get registered.
Reliance Industries sells stake in its oldest business division, divests 49% of the textile business to China's Shandong Rui.
The world's top-selling drug gets cheaper. Zydus Cadila launches the first generic version of the anti-inflammatory drug adalimumab in India at 1/5 of the price in the US.
The CPM demands a rollback of the excise duty hike on diesel and petrol, wants the entire benefit of crashing crude prices to be passed on to the consumer. Rajya Sabha will discuss and vote on the issue.
It's a race against time for SpiceJet. The aviation regulator sets December 15th as the deadline for the cash-strapped airline to come up with a credible revival plan.
India will lead the world in jobs growth by 2016. Hiring expected to pick up next year.
And Google's 72-hour shopping extravaganza starts at midnight tonight. The company says this will be bigger and better than the first two installments.
कल अगर रेलवे में एक्सीडेंट हो गया तो रेलवे बंद कर दो, टैक्सी में हुआ तो टैक्सी बंद कर दो, बस में हुआ तो बस बंद कर दो, तो ये तो बात ठीक नहीं होगी.
टैक्सी सर्विसेज तब तक यह न मुहैया कराई जाए जब तक कि स्टेट गवर्नमेंट अथवा हमारा यूनियन टेरिटरी एडमिनिस्ट्रेशन प्रॉपरली उसका वेरिफिकेशन न कर ले और प्रॉपर जब तक रजिस्ट्रेशन न हो जाए तब तक यह नहीं मुहैया कराई जाएगी.
जो ऑपरेट कर रहे थे uber.com के थ्रू, जो कि इसमें सहभागी हैं, क्योंकि एक ऑल इंडिया टूरिस्ट परमिट वाली व्हीकल को एज अ लोकल टैक्सी नहीं यूज किया जा सकता.
कितना घटना हो रही है, इससे हम सब लोग शर्मसार, खास करके सरकार को होना चाहिए कि कहती कुछ है और करती कुछ है.
While the pressure mounting on web-based cab services like Uber, the government seems to be divided. The Transport Minister opposes an outright ban. The Home Minister has advised states to stop services like Uber till they get local registry. The road ahead looks pretty rocky at this point in time, and then it brings up the question on innovation being ahead of regulation, and when will regulation play catch-up? Of course, there is need for checks and balances, and perhaps the time is now ripe for a regulator like the TRAI, an independent regulator, to be put in place.
In fact, that's one of our Twitter questions of tonight that you can tweet to us. We will be playing the best ones on India Business Hour.
But let's go straight to the market action, because that's what it's been about today. That is our top story. Dalal Street coming under severe selling pressure for the second straight day. Weak global cues and some technical factors took the markets to their lowest levels in a month. The Sensex lost about 300 points yet again, slipping below the 28,000 mark. The Nifty losing about 100 points and broke below the 8,400 level. The midcaps also got battered in trade today, with the midcap index losing 200 points. Anuj joins us now to wrap up the day's trading action. Anuj, to be fair, this is not just an India story. We saw global equity markets selling off as well on account of the news that came in from China. Is China to blame for the sell-off that we saw back home?
Well, China really was an excuse. The market was weak in any case. For the last 3 or 4 days, the market had been closing at the low point of the day. It started with Friday when the market was down. Yesterday, the market was down 100 points on the Nifty, and today that 100-point weakness came back. So really, it's a market which was prone for correction and is now going through some correction. The mid-cap space is the one to worry about. Today also, there was quite a bit of bleeding. 1:4 advanced decline ratio. And for the Nifty, really, 8,400 breached effortlessly, and maybe the door is now open towards 8,250 or so. Let's talk about individual stocks then, because heavyweights put quite a bit of pressure on markets today. L&T, ONGC, Tata Motors, all down between 3 to 4%, all putting quite a bit of pressure on the Nifty. Some other individual names that would have put pressure on the market today included Bharti Airtel, down about 4%. There was one negative report from an institutional brokerage in the morning. ITC was down 1%. Now ITC has been a pillar of strength for market for some time, but today it was down 1%, and NTPC down 3.5%. Metals were down. That's the China factors. Tata Steel, Hindalco, Sesa Sterlite, all of them were down. On the winning side, you had a couple of pharma names like Sun Pharma and Dr. Reddy's and Mahindra as well. But the problem is that these really don't make up the market. On the mid-cap side, some stocks that stood out on the losing side included stocks like TV18, that was down 8%, owner and producer of the channel you're watching, IFCI down 5%, and Syntex as well down 5%. And finally, some notable winners in today's trade included Jet Airways, which has almost everything going for it right now, NCC down 4%, and Havells India up rather 4% in today's trade. So that's the market for today. Looks like the correction may continue, and the Nifty might gravitate towards, say, 8,250 or so. At least that's what the technical setup is telling me.
All right, let's see if we can find a pullback from here or these levels. Anuj, thanks very much, but I guess global cues will dictate the way that we open for trade tomorrow as well. Equity markets across the world are under pressure. In Asia, the Shanghai Composite. In China, the biggest loser, down over 5%. Analysts attribute the sell-off to profit-taking, expectations of a lower growth forecast for 2015, and liquidity fears regarding the new corporate bond market restrictions. The Hang Seng in Hong Kong was down more than 2%. The Japanese Nikkei and the South Korean Kospi also ended the day with losses. But shares on Wall Street have also opened with steep cuts, and it's not a pretty picture at all. Deep cuts for all the major indices as we speak. Mary Thompson joins us from the NYSE. Mary, not looking good for global equity markets. Are the US markets reacting to the news coming in from China as well?
Certainly, that was one of the things that set the tone here on Wall Street, where the Dow is just off its lows of the day. Earlier, it was down about 218 points. Right now, down 193 points. You know what we're seeing today? There are a couple of things. Heavier volume here in the U.S., suggesting some of the money is coming in from overseas, but basically a bit of reversal in a number of different sectors. First of all, you have to take a look at what's happening with dollar-yen. That has dropped significantly below the 120 mark, about 118 and change right now, and traders say this, of course, suggests that investors are becoming more risk-averse. In addition, we're seeing a big pop in gold, up $39, and some of the better-performing sectors that we've seen recently here in the U.S. are taking a hit today. I want to point out the transportation index for the Dow Industrials is down 181 points right now. One of the smaller discount airlines here in the U.S. filing in a filing with the Securities and Exchange Commission is saying some of its competitors are no longer passing along or keeping those lower fuel prices that we're seeing here in the U.S. to their customers. And basically, they're passing them along to the customers. So that raises questions about that sector's profitability. Also, I want to point out that the yield on the 10-year bond has now dropped below that 2.2% level that a number of people were watching 2.195%. So again, what we are seeing today is investors taking a far more defensive stance with their portfolio. We're seeing them putting money into gold, into bonds, into yen, and into utilities today. So despite the good jobs report that we received here on Friday, there are still concerns about the global economy, and that is putting pressure on the broader markets here in the U.S. today. Back to you.
Mary Thompson, thanks very much for joining us there from the New York Stock Exchange with a live update on what's going on Wall Street. As Mary was pointing out, gold is actually moving positively today. It's higher by about 2.5% as we speak. The China rout is having an impact on European markets. Also, the FTSE, the CAC and the DAX are under pressure and have lost nearly 2% as we speak. The picture's bleaker for the peripheral market. Stocks in Greece, for instance, have tanked over 10%. That's the mainline indices for you. But let's bring up the peripherals and look at the AFEX composite. It's now down almost 13% as we've been pointing out. Deep cuts across markets in Spain and Italy as well. Essentially no one being spared today. But here are a couple of experts on China's liquidity fears and how that could impact global markets in the coming days.
The Chinese government is trying to strike this very fine balance where they want to maintain growth momentum even as it is slowing, continue with their financial market and broader financial sector reforms, and at the same time not go back to the playbook they had back in 2008-2009 during the financial crisis when they had this explosion of credit which helped support economic growth but is having very negative ramifications to this day. So the move taken by the Chinese government today sort of indicates the tensions that they face. What they're trying to do is let the air out of the housing bubble very slowly, try to make sure that there isn't too much fraud in financial markets, while at the same time trying to make sure that there is enough credit to support economic activity.
There are going to be some scares and hiccups along the way, but I think my prognosis for 2015 is that Europe and Japan look like they will remain challenged. China has seen a massive rally in the equity markets, but the economic fundamentals to us look as challenged as before. Commodities like iron ore certainly don't give us any comfort that China is about to come out of its significant slowdown, so it's going to continue to remain slow. So I think growth is going to be scarce.
Experts take there on what we see unfold in China could impact global sentiment. But China's not the only factor. Of course, the continued weakness that we're seeing in global crude oil prices, perhaps also because China is one of the biggest consumers of oil. Oil prices today, this Brent especially, had hit a fresh 5-year low at one point, trading below $66 a barrel. Since then, it has bounced back. So those are the levels you're seeing as far as Brent and NYMEX go concerned. Still remain, as far as the glut in the market go. There have been some bouts of bargain hunting, but they haven't had much effect in bringing prices higher. So that's how the current levels are trading at the moment. Back home, of course, good news for the Indian crude basket. But the big question is, have prices bottomed out, or are they going to slide further? Here are a couple of experts.
But we have seen gasoline prices fall quite substantially in the US. And I guess the thing to remember is that a lot of economies put tax on oil. And so that kind of dilutes the impact of the fall in crude prices. And of course, one of the temptations for a lot of governments in this environment, a lot of governments struggling to improve their finances, is to actually say, right, this is an opportunity to cut subsidies or to increase taxes on oil in order to help our budget deficit without hurting our own consumers. So this oil price fall is very positive, I think, for the consumer, but a lot of governments might be looking at that revenue and thinking, well, we could have some of that.
Oversold for a reason. It's oversold because the fundamentals truly do look weak. And so it's possible for a market to remain oversold for an extended period of time, and for what looks cheap to become even cheaper.
Well, the crude market may be oversold and it continues to decline. Slight pullback is what we're seeing as we speak. Away from the markets, the other big story, after much to and fro, the Telecom Commission has finalized the base price for spectrum to be auctioned in February. The Commission has recommended prices higher than what had been suggested by the telecom sector regulator, that's the TRAI. The Telecom Commission's recommendations will now be placed before the Telecom Minister, Ravi Shankar Prasad, for a final approval. Malvika joins us now with the details. Malvika, what has the Telecom Commission agreed to?
Well, basically, it has fixed a reserve price for 800, 900 and 1800 megahertz band of spectrum. We know the reserve price for 800 megahertz band of spectrum has been fixed at 17% higher than what the TRAI had recommended, at around 3,600 crore rupees. But as far as 900 and 1800 megahertz band is concerned, which is utilized by companies like Bharti Airtel, Vodafone and Idea, It is not known what the reserve price is that has been decided upon. A final call is expected to be taken by the Prime Minister's office. But let me point out that it is not the reserve price for 800, 900 and 1800 which is critical. It is for 2100 megahertz band of spectrum, the 4G spectrum that is crucial because companies such as Bharti Airtel and Vodafone, and for that matter Idea and Reliance Communications, will necessarily have to participate in the upcoming spectrum auction, and they are fighting it out with the government that it should make more spectrum available, and that is available only in 21 megahertz band category. So now whether the government will be able to make more spectrum available, whether defense is going to agree to free up some spectrum, and what the reserve price for that category is going to be will determine how the auction is going to pan out for the companies.
All right, Malvika, appreciate you joining us, but a final decision is still awaited. Let's stay with the telecom sector. It is a major setback for the telecom department, but relief for India's top two telecom companies. The Telecom Tribunal has set aside hefty fines imposed by the DoT on Airtel and Vodafone for offering subscriber local dialing services between 2002 to 2005. Ashmit joins us now with the details. Ashmit, if I remember correctly, the penalty amount on Airtel was 650 crore rupees. It was 100 crore rupees on Vodafone, and this TDSAT order is going to be a big boost to both.
Well, indeed, and especially with respect to the quantum of the penalty itself, TDSAT not just sets aside this order, but also in fact pulled up the DoT for what it called were grossly disproportionate penalties. I'll come to that in just a bit, but of course, just to recap the quick developments, it's important to point out that this order was passed in July of 2013. This order, which had slapped the penalty 650 crores on Bharti Airtel, 100 crores on Vodafone, has now been set aside. The bone of contention was services called subscriber local dialing services that were offered by the duo of Bharti as well as Vodafone between 2002 and 2005. Now these SLD services are nothing but a more efficient means of routing calls when a customer is on roaming. Now importantly, the DoT had raised the argument that this was violative of the license agreement. However, these telcos had responded that they had in fact updated the TRAI. In fact, the TRAI had been apprised of all these developments, and hence there was no question of any possible violations, and this was the chief argument that was upheld by the TDSAT. Furthermore, the TDSAT also raised the question as to why there was a gap of nearly 8 years between these services being offered and between the penalty being levied. Furthermore, the TDSAT also reasoned by way of its order that the DoT had not exercised sufficient due diligence in terms of verifying the claims and the allegations that had been slammed against both these telecom majors. And finally, the TDSAT by its order has also pulled up the DoT for what it called was a grossly disproportionate penalty. Mind you, this penalty of 650 crores on Bharti and 100 crores on Vodafone is on the extreme end of the band that is available to the DoT in terms of levying these penalties. So these penalties essentially TDSAT saying not a means of raking in revenue. So these were of course the key takeaways. It's also important to point out that this is an order by a tribunal which is appealable. Hence the ball is squarely in the DoT's court whether or not they choose to move ahead and accept this order or challenge this before the apex court.
All right, Ashmit, we'll have to leave it there. Appreciate you joining us. For now, it's relief. As Ashmit pointed out, of course, they can appeal against it. The DoT can appeal against this order. Let's now move to news from the deal space. Reliance Industries has disinvested its stake in its oldest business segment, that's textiles. The company has entered into an agreement with China's Shandong Ruyi for a 51-49 JV. The company will transfer its textile business, which consists of brands like Vimal, into this JV. Reliance will receive a consideration for the 49% stake sold in the textile business from the Chinese company. What that is, we don't know. The Chinese major is already operating in India with brands like Georgia. The joint venture will build upon the textile business and distribution network of Reliance. Standard disclosure, Reliance is the owner of the channel you're watching. And Google's 72-hour shopping extravaganza starts at midnight tonight. Google says this will be bigger and better than its first two installments, but will Google manage to avoid a Flipkart-style online glitz? Zara Khan, Purnima Murli and Archana Shukla get you more.
Over 450 merchants offering deals that will leave the shopaholic in you drooling. That's the carrot Google is dangling to Indian retailers as it gets ready to launch its Motorola Nexus 6 and Chromecast exclusively in India. From designer apparel brands to car makers to real estate developers to home loan providers, everyone's busy gearing up for a slice of the action as Indian shoppers look to get the biggest bang for their buck.
At our end, we're trying to make the process as simple and easy as possible. So, thereby allowing them to actually book an apartment with a fairly less amount of money, giving them the flexibility to come over, actually visit the site, giving them time to make that choice on which apartment they would like to choose. As of now, we have identified, this being our first step, we have now identified about 100 units of our ready-to-move-in inventory.
The fact that more merchants mean a bigger challenge in terms of technological support is not lost on Google. After all, it does not want its big sale to go the way e-tailer Flipkart's Big Billion Day sale went a few months ago.
When an industry is growing so quickly, there are growing pains, right? Sometimes the infrastructure doesn't work as well. Sometimes the deliveries don't happen on time and so on and so forth. So we worked very hard over the last 2 months that each one of our 450 merchants are ready and our infrastructure, which is the GeoSF site, is capable.
E-tailers like Amazon, Myntra, Snapdeal and Jabong have also jumped onto Google's platform for this event, but not Flipkart. This e-tailer has decided to take on Google by holding its own discount festival, the Big App Sale. But Google is not worried. Its 14-day roadshow ahead of this 3-day sale has already received a strong response, exceeding the traction it got for last year's event. With Purnima Murli in Bangalore, in Mumbai with Zara Khan, this is Archana Shukla.
It's a big shopping bonanza on Google. On to corporate news, Sun Pharma and Ranbaxy gained in trade today on a day our markets were under pressure. This after the Competition Commission of India gave a conditional approval to the $4 billion proposed merger. Brokerages believe the two companies stand to fetch decent returns when they sell the 7 brands as mandated by the Competition Commission. Ekta Batra standing by to tell us what the brokerages had to say. Ekta, who said what?
Hi, I'll start with Bank of America Merrill Lynch on Sun Pharma. They're neutral on Sun Pharma. They believe that the CCI approval was a major hurdle, which is now clear. And the merger, however, is likely to be delayed for a few months. The deal now has to get the U.S. Federal Trade Commission approval, which is likely to happen in the next few months. HSBC believes the CCI approval was the biggest hurdle to overcome. The divestment of brands should not impact materially on a financial basis. In fact, they have an overweight on Sun as well as on Ranbaxy, and for Ranbaxy they've increased the target price to 840 versus 740 rupees. Barclays remains overweight on Sun as well. They have a target price of 1013 rupees. They view the approval from the CCI as positive, and the divestments according to Barclays could result in a cash accrual worth around $25 to $30 million, and they reiterate that Sun's acquisition of Ranbaxy is likely to be value accretive. Lastly, Edelweiss has said that CCI Nord lifts an overhang on the stocks. They expect the deal to close before March 2015. They maintain a buy as well as a sector outperformer on both Sun as well as Ranbaxy, and the target price is at 950 for Sun from Edelweiss and 760 for Ranbaxy. So it's a thumbs up.
All right, Ekta, thanks very much. Both those stocks up and about in trade today. Cadila Healthcare has launched the first generic version of the world's top-selling anti-inflammatory drug, adalimumab. The company is confident to generate revenues of about 100 crore rupees from the drug over the next 3 years. Malvika Jain and Archana Shukla get you more.
Zydus Cadila has developed a generic version of the world's top-selling $11 billion anti-inflammatory drug, adalimumab. Zydus has launched the drug at 1/5 of the US price that the innovator AbbVie charges for its product Humira. The drug, which can cure various types of arthritis and spondylitis, has already received approvals from the Indian drug regulator. The company is confident its drug will be well received in India, where 12 million patients suffer from such chronic conditions, and innovator's drug Humira is not available.
We are looking at a revenue target of between 100 to 150 crores in 3 to 5 years. It is very difficult to estimate revenue, and it is only an exercise that we can do. But more important is we are going to target patients. So we are not going to be looking at value in terms of just rupee value, but making sure that it is more and more accessible to patients.
However, at a price tag of 25,000 rupees per injection, the drug may be out of the affordability bracket for many, hence impacting the sales. Besides that, experts say that even after being the only generic version of Humira, Zydus Cadila's adalimumab may have to face competition from Cipla and Ranbaxy's biosimilars that also treat some of the conditions that adalimumab does.
It also depends on the adoption of the physicians, the doctor who is going to recommend the product, because this is highly specialized, and Cadila has launched it in the pre-filled syringe form. So, to have a 25,000 rupees per injection itself is a high premium, and it will probably see competition from within that same bracket of biosimilars like Enbrel or, infliximab.
Zydus first intends to build its market for the medicine in India and will then start filing for regulatory approvals in regulated markets like the US and Europe. Given that Humira will go off patent in 2016 in the United States, multiple MNCs are progressing with their generic versions. The global ramp-up for Zydus' product will be closely watched. In New Delhi with Archana Shukla, Malvika Jain.
Well, new drug there from Zydus Cadila. On this note, it's time for us to wrap up this edition of India Business Hour. But do stay tuned to CNBC TV 18. We will be back with the market action. We'll tell you what the global cues look like and what that means for trading back home. Till then, from all of us here, goodbye and many thanks for watching.
CNBC TV 18, celebrating 15 years of leadership.